So I've turned on the recording, everybody. And now that we've all seen and agreed to the disclaimer, for all intents and purposes, today's event is it's kind of like a special occasion. We were talking with a lot of the traders inside of our GAP program. And just so you guys know that this was not a planned event, this was more me wanting to help traders. I went to Jim and I said, we're getting a lot of questions about Gap. We're getting a lot of people that are making a lot of money and doing a lot of great things in the inside of it. We're getting a lot of success, a lot of traction since we released it. And we got a lot of traders doing better than they've ever done, essentially, since joining Gap. So I said, there's a lot of people that want to learn that are in Gap. And then there's a lot of people that are not in the GAP program that have a lot of questions and want to be kind of exposed to a lot of things. So, rather than just sell you some program or try to convince you that we've got the holy grail or anything of the nature, I think it's better that I just teach you what we're doing and show you the success of what we're doing. And that should indefinitely just sell itself. I mean, in reality, results speak for themselves. Success breeds success. How many of you guys would agree that that's probably a better approach than just doing a standard webinar, right? Like we do webinars all the time, but sometimes it's nice to learn the meat, right? And understand what's really going on under the hood, right? If you're going to buy a Porsche, I want to know what's going on in there, right? I want to know, why is it so valuable? Why should I even look at this versus other alternative options, right? So that's what we're going to do today. I'm going to go through a lot of stuff here because a lot of this stuff will be completely overkill for new people. Some of this will be a breath of fresh air for those of you that are inside the GAP program. But I just want to kind of ask a couple questions here because I really don't know where you come from and who you are. And the first one is, are you actually succeeding right now? Like, can you guys do me a favor? And for those of you that are out there that are not in our program, that are joining us from the outside looking in, can you guys just tell me, are you actually succeeding as a trader right now? Where you can look yourself in the eyes and say, you know what? I'm doing it. I got this figured out. This is exactly where I need to be. And you know the truth. Like, I can't sit there and pull wool over your eyes. I mean, you don't need to tell me. I mean, when you look inside your own soul, you'll know if it's bullshit or not. Right? Right? I don't see a lot of yeses. I don't see a lot of yeses. Still struggling, Sammy? Yeah. Well, not with NeuroStreet, Daniel, only with outside FX stuff. Getting better results, Yoshi. Okay. Well, one thing that's for certain is that the market is always changing, which makes it very difficult for traders to maintain consistency. And as a result, because the markets are always changing, traders always want to change. Because the market's always changing, traders are always trying to adapt to the market versus understand how to trade it. And there's a level of adaptation that has to happen. You have to be able to understand trending markets versus oscillating markets. But once you realize that it's not really about that, and you understand that there's something else going on here that you can actually really take wind of and take hold of it, you can truly master this business. And it doesn't have to be a bunch of hocus pocus. It doesn't need to be a sales pitch. It's truly, if you learn successful tactics and you understand a successful strategy, you can do it, right? So the next question is, if I show you a winning edge today, are you committed to learning it? How many of you guys, if I just asked you truly, just stop doing everything that you're doing that's not working for you? I know it's hard. I know it's hard to stop. It's really hard to kind of just sit back and say, you know what? I'm willing to do whatever it takes If you're not willing to do whatever it takes, you don't belong here and you don't belong in this business, period. I'm just going to call you out on it. You may not like my approach. You may not like the harsh reality, but I'm going to rip the Band-Aid off. As a master instructor who's taught a lot of very successful traders, I'm here to tell you the truth. I don't care if you buy our programs or not. I'm going to break down the reality that if you're not willing to do whatever it takes, you do not deserve the reward of a trader, period. And that means being willing to accept you got to just accept that all the money and all the indicators and all the strategies and everything that you've ever invested in got you to today. You have a choice. You can look at it as, well, man, I'm beaten up, right? I have a negative look on all this because all I've done is spend money and I'm just tired of it. And okay, or you can say, you know what? This has brought me to where I am today. It's a journey. I have to accept the realities that if it was easy, everybody in the world would be doing it. And you can control the narrative. You can be positive or negative. But either way, you're right. What do you think it makes sense to be? Would you rather approach today and what I'm about to share with you and some concepts that can truly change your business with a positive outlook, drop the walls, let go of the attitude, let go of the negative mindset, whatever it is that's keeping you stuck, or you can just stay negative? Who's here ready to be positive? Can you give me a yes if you're on it, if you're in it to win it, you're ready to make a change, you come here with an eyes peeled back, because I know everybody says yes, but there's a big difference between talking and doing, right? And if you're a doer, then you belong here today and you belong with us. If you're a talker, you're lying to yourself. You're not kidding me. Because if you're ready to truly make a change. And it shouldn't be about money. If you're worried about money, you're stuck in the problem, right? If you know that there's an opportunity for you to truly change your narrative, then it shouldn't be about money. It should be truly about the solution, which is why I'm going to teach you the strategies today. I'm going to show you some things today that I don't have to show you. I can keep this all inside. I can keep it inside of our program, and you got to buy it to enjoy it. There's a lot of things that you're going to benefit from inside of our GAP program. And the reality is that I'm going to open the can here a little bit and share with you some of these stuff today, even if you're a member or not. And my hopes today that after today's AMA that you'll want to be a member, because there's a lot of stuff happening that I can't do in one webinar today that is going on a daily basis inside the GAP program. But this should be an eye opener for you. Okay. Now, there's a lot on this document. Okay. And we're going to talk about the key parts. Multi-time frame analysis. One of the core foundations of what we do is that, first of all, do you see any indicators on this chart? The only thing I have here is a line indicator, but do you see any indicators on this chart? Anybody here see anything that I don't see? No, I don't think so, right? Well, I'm here to tell you that there's many ways to trade. And we develop a lot of indicators. We develop a lot of trading systems, a lot of algorithms, a lot of amazing pieces of software. We've got successful traders all over the world trading a whole lot of different things. That doesn't mean that you're supposed to do all that. And it doesn't mean that that's the way that you need to trade. You might be a volume profile trader. Fantastic. You might be a momentum trader. Amazing. Maybe you're a trend trader. Whatever you are, that's fine. If it's working for you, then you're in a really good place. But I didn't see a whole lot of people tell me that they're really successful today when I asked the first question. So I'm going to ask you that if I show you a strategy right now that doesn't involve indicators, doesn't involve anything else, platform neutral, market neutral. I'm going to look at futures. I'm going to look at Forex. I'm going to look at cryptocurrency. This can be used on stocks as well. Okay. The whole point of this is that you need to learn price action. It is 100% based on price. And it is hinged on the fact that we have a hybrid approach. We use multi-time frame analysis using higher time frames to scalp intraday trades. So let me repeat this. The majority of our time is used on pre-planning levels. We have moved to a patient approach. Everything we do is pre-planned in advance. In the NeuroStreet School, we changed the room to be a pre-planned environment so that we can pre-plan all of the trades. So one of the things that we do every single day is we have an instructor pre-planned section. Let's close all this off so that we can just make it so that you see here in the Discords, and we're there. So we have this gap section here, okay? This is only for our members. And what we do is we have live trading picks, okay? And we have an instructor pre-planned section. This is anything with an INST is the instructor pre-planned place. So we have an instructor pre-planned futures. We have an instructor pre-planned FX, right? We have an instructor pre-planned crypto, but traders cannot post in those threads. Those are for instructors. And all we're doing is spoon feeding opportunity. We're basically every day scanning the market, showing you where the setups are, showing you where the trades are, okay? Then we have the students posting trades. We have the students posting the trades, okay? So we have the instructor threads, the students, and then we have the live trading pictures, okay? We have all of the live sections in here, okay? Here was a trade that Jim took this week on copper. You probably say, well, I've never traded copper in this world. Well, we trade everything. That's the difference, is that we trade anything that has clean price action that meets the strategy, whether that's the euro dollar, whether that's the Swiss franc futures, whether that's copper, whether that's platinum, gold. We don't care, because when it's time to trade, it's time to trade. Now we do this. You know, these were trades that hit. I basically set a bunch of instructor pre-planned Forex trades. I was setting a bunch of Forex trades in here, and Jim posted a bunch, but I put a bunch of trades in here. I said the euro's setting up for two nice levels. I planned these trades in advance, and then I basically, you can't deny it, like these levels hit for like 7R multiple trades. There was like 2 stops and then like 2 big banger trades that and we're trading for huge trades. Like, we're not trading for scalps. You can scalp with a very small stop loss, but the whole point is that you don't need to be a really good trader to come in here and replicate what we're doing. You just need to be able to follow our pre-planned trades until you master what we teach you. So that's the first advantage. You're not going to get that here today because I can't spoon feed you trades all day long. We're going to do some trades today. We're going to scan for some trades. I'm going to show you some stuff. But that's a big part of what we do. And we use the daily and the 4-hour for everything. You say, holy shit, what are you talking about? Like, I'm a day trader. I never, when's the last time you looked at the daily and the 4-hour time frame as a day trader? Anybody here? Like, how many of you guys use the daily and the 4-hour chart as a regular time frame for yourself? Give me a yes or a no. Like if you're an active day trader, how many of you guys are using? I got a couple of yeses. Majority of you guys are saying no. Daniel's saying no. David's saying no. You do now, Peter. Yeah, you do now. Rodney's saying no. Okay. It's a mixed bunch. Brian, you're in the program. Not fair. Okay. Why do you think we use the daily and the 4-hour? Like, why do you think my highest time frame is the daily, and then the next time frame down is the 4-hour? The 4-hour chart is the highest time frame inside the daily auction. The bigger guys that are making the decisions that actually are the market, they don't live in the 5-minute charts. They don't live in the 15-minute charts. They move their money around on the 240 and the 60. They use the 15-minute and the 5-minute for timing risk, but they don't make their decisions on those time frames. So you need to understand that if you're trading inside of, let's say, a 2-minute chart, you could scalp the market for some wins once in a while, but you're never really going to see what's going on. You're going to get a trend and you're going to be like, wow, today was a trending day. You won't even understand why. You say, oh my God, like we really had some volatility today, but you're sitting there reacting to that trend. You had no idea that that trend was likely to happen today and when it's likely to stop and why it's likely to turn around. You're just like, holy shit, the market trended today. We don't think like that. Like anybody in the gap program knew in advance, like why the market's reacting where it's going and what it's doing, because all of our mindset is on the big picture. We don't go into smaller time frames until it's time to execute. In fact, 80% of our entire job in the gap program is planning the trades and being patient enough to wait for them to get there. How many of you guys would agree that, you know, having an understanding of the big picture would probably change your outlook on the way that you're trading? Yes or no? You probably wouldn't be in tunnel vision all of the time, yeah? Well, the next thing is understanding where we're placing zones, right? Like we're trading zones that are based off supply and demand. We're basically trading zones that are based off of order blocks and smart money concepts. We're trading zones that are based off of fair value gaps. So we don't just trade one zone. We trade a combination of supply and demand, smart money concepts, and fair value gap analysis. We use a combination of several different concepts. But the big question here is, how do you know that the zone will hold? Like if I came down in here and I drew this zone right here, which was a valid order block, by the way, which already reacted. So we're not going to, like if I had a zone right there, the question is, how do you know if that zone is going to work? You could plot a level, go down into the 60-minute, refine that level, okay? Put a pending order in here, and you have no idea if that order is going to hold. So there's a level of probability that has to be understood as a trader, that you can put an order in here, and the market comes down, and there's a chance there's a 50-50 chance that that level is just going to go boing. And there's another chance that the market's going to do this. And you have no way of knowing that pre-trade. You guys understand that? How many of you guys would understand that when you plan out a level, you don't know the risk? You know the strategy. You know where you want to take a trade, but you do not know what the market's going to do. So what we do is we have risk reduction concepts that we do and we teach, and we also have confirmation concepts that what we do is we will teach you how to assess the risk and how to trade always with evidence that there is a much higher probability of you taking a winning trade versus a losing trade on every single trade that we take. How many of you guys would like to know that? Right? If I had a way to show you to how to stack the odds in your favor every single time you take a trade, you would be managing risk, doing your job. Now, here's the question. Missing a trade is outside of our control. So I'll give you a great example. Crude oil today. Crude oil hit a level that was 100% valid based off of our strategy today. In fact, that was a banger trade. Huge, huge trade came out of crude today. And we waited for that trade. But the problem with this trade is that you have no idea if this trade was going to work or not. So if I go down into a 2-minute chart for a second, I'm going to just show you this. Based off the way that this market came into this level, okay, based off of risk management practices and based off of probability analysis, this was a trade that I would not have taken. Now you say, well, wait a second, that was a huge trade. Yes, it was. But there's a type of trader that will always have to decide, okay, if I go into crude and I show you this, okay, you're going to have to make a decision as a trader, the type of trader that you want to be. And that is going to be something that you decide. This was the strong high, okay, that basically got broken off of our level. Okay. This was the pullback. This was the impulse leg. And inside of this was the demand zone that led to the break of structure. Now that's a pretty big zone, but it is the starting point of how we break down our analysis as a day trader. And we will go into the 60, and then we will look inside of an area to see if there's anything we can do to reduce that risk to a good trading opportunity. Now, there are some traders that will just take a pending order and put a buy limit here. And those types of traders are the riskier traders. Those types of traders are basically saying that I always trade on limit and I will always take a trade, whether it's a limit or whether but a trader that wants to stack more probabilities on their side will not do that, because you do not know if the level is going to go in it deeper, if they're going to run the stops and then go. You do not know that. And that therefore adds a level of risk. And the problem comes into the psychology of a trader, not the strategy. The psychology of a trader will always crush your business before the strategy. You as an individual will ruin the outcome ever before the strategy. If you are not okay missing a trade and understanding that how a market responds to an area is completely outside of your control, you're going to take unnecessary risk that's not acceptable as a business owner. Your job at all times is to manage the risk and increase the probability of your trade working. And you have to be psychologically ready to say, that didn't enter on my strategy rules. How many of you guys understand where I'm going with this? Because the level on crude today was not a missed trade. It would only be a missed trade if you were waiting for some form of confirmation, some form of evidence that the level had a higher probability of holding. Can you guys understand where I'm going with this? When we teach traders inside of our school on the levels, we will teach you how to understand the level. We will teach you how to find the level. Hell, we will even spoon feed you the level for months until you get it. We will tell you where it is. There's the trade level. There's the fresh level. There's the break of structure. Everything, we will trade it for you. We will do it for you. But we cannot be the person that pulls the trigger. And what happens is a trader will always have that battle going on inside their mind. And the reason I wanted to talk to this concept today is because it's really to help all the members too make a decision on how to enter. And we're going to talk more about confirmation entries today in these areas. And we're going to talk about how the S&P set up with some great trades. We're going to talk about how the euro set up with some great trades. We're going to talk about other markets like your copper trade, Jim. Today, we're going to show you how a first touch could have entered and how a confirmation entry could have entered, and how one will dictate a different level of probabilities versus the other, right? The whole point is to be able to show traders that there's multiple ways to trade the same level. So if we can always stack as many odds on our side as possible, then should this not be our primary focus? Answer that question for me. If I give you a strategy and I show you where the trade setup is, and I teach you why we want to trade that level, what should be the next decision in you as a trader? To increase the odds of the success. Am I wrong or am I right? Am I speaking to myself or is everybody here on it with me? If I give you the strategy and I show you where the trade level is, should the decision for you not be to increase the probability of you making as much money as possible versus taking excessive risk? Now, there's going to be traders that are going to enter on first touch. You will always get filled, but the risk is the highest. You can reduce the zone size. Like, let's say you have a trade that your setup is like this, and you have a buy limit order like that. You could reduce the zone size and make your stop loss smaller than, say, this. But that didn't change your risk. That just changed the size of your stop loss. If you're entering on a first touch, your probability of hitting your stop loss did not change. All it did was make your stop loss tighter. So this is the argument that a lot of traders have. We never know how deep a level will go and how price will react. If it's going to react off the edge of a level, if it's going to react inside the zone. We don't know that. So if you know that you have no way of knowing, shouldn't your job always be saying to yourself, I have no control over the market. So my job should be to wait for the market to tell me what it's going to do. And if the market doesn't tell me with a clear indication that I should be putting risk on in this trade, I am not going to put my capital at risk. How many of you guys think that that's a pretty good statement that we should be telling ourselves as a trader? I guarantee you, nobody does it. Nobody does it. Because we're all fucking addicted to making money. We're all wired for the casino mentality. We're all wired for that quick fix or that, oh my God, I got to get in, or oh my God, I waited, I planned this trade. I'm supposed to. That's like taking a bag of cash and sitting at a bonfire and just throwing the bills into the open flame just for no reason. The fear of missing out, because your brain is saying, well, there's not going to be another trade tomorrow, or there's not going to be another trade later today that could be giving me better risk and reward entries, that could be giving me better opportunity. That is the plague disease of the trader. And this is why I believe pre-planning your trade strategy. If you have a strategy that allows you to pre-plan your levels versus react, you have the ability to make a better decision. If you get up today, okay, if you get up today and I go down to this, and let's say you just got into crude and you turned on your screen and you're sitting right there and all you're doing is looking at a 2-minute chart, you do not know what's going on. You could sit there and say, oh, I'm going to trade a reversal today. And you get smacked because we went into an uptrend. You could say, we're going to take a trend trade today. And you trade the trend way up here, but the trend ends and you get stopped out. You're sitting there reacting to a market where we had been willingly waited for this to happen, knowing how this is going to happen, knowing that this is where the market is supposed to do something seriously important. And the difference is that it's not about engaging in this trade or in any other trade. It's about knowing with a level of certainty that you have evidence that the market is supposed to do something and that it is likely to do something. And when you start realizing that 90% of the time when you're planning these levels and you see the reaction, psychologically, that starts to rewire your brain and show you that, wow, these guys are really onto something. Like, look at how the market's reacting out of these areas. Wow, look at this trade. And then you stop fighting the inevitable bullshit between the ears and stop questioning everybody's ability to show you a winning edge. And you start paying a little bit more attention to, wow, what are these guys doing? Like, they're really doing something different. So I could sit there and teach you. We're gonna take a look at some different ways to enter levels. This is going to be taught in more detail in some AMAs inside the gap here. The biggest thing here that you will need to learn, and I would ask Jim's opinion on this, is structure mapping. This is the most important thing you can learn in the business in what we do. We teach you structure mapping. Structure mapping is the backbone to everything we do. You need to learn how to read structure. You need to learn how to read major versus minor structure. You need to understand what it's telling you, why it's important, because this is price action. And you will see that when you learn this, I promise you with everything in my heart, when you learn this, you will be the most powerful trader that you've ever been. Like, I've never been more confident in my ability to read the market and understand what I'm doing when you learn this. I'm going to open up the chats here for a second. Guys, can you do me a favor? I didn't realize the chat was closed. So can everybody in here that's in the GAP program right now, can everybody that's in the GAP program just write an opinion on what the structure mapping has done for your ability to understand the market? I know that there's people writing, and just post it to everybody in here. Just write it to everybody.
Yeah, I agree with that too, by the way, Sean.
Like, I watched you trade, Jim, and I've watched Gilbert and Bobby and Roy. I've taught them all everything. They came into my business years ago. I mean, I'm not sitting here claiming their fame, but everybody's learned from us. And structure mapping has been more powerful to me than anything I've ever taught or learned from anyone in the world. Why? Well, first of all, is I had to peel my eyes back, because actually post it to everybody. Yeah, post it to everybody. Go choose to post to everybody, guys, because there's some of you are posting to panelists, but not to everybody. I don't care who you are in the business, whether you're a new trader or an experienced trader that's been in our network, and I don't care if you're better or worse than me. Nobody, and I mean nobody, is going to be able to change what happened to me when the mentors that showed me this showed me how they were trading and the money that they were making. That was when I said, okay, I'm going to master this. I'm going to learn this, because as you guys know, I'm an experienced system developer. I built hundreds of strategies and systems. We sell them through ARC. I mean, I've got a lot of experience, but this changed me at the core level. And it's changed everybody that I've taught this to. It changed you, Jim. I've never seen you trade better than you've ever. This has changed you as a trader.
Oh yeah, I'm trading better than I ever have. Yeah.
Yeah. Like,
I like to think I wasn't that bad before.
Let's not bullshit, Jim. Let's not bullshit here.
Let's not. Now.
No, all jokes aside, I've seen people come into the program that, like, I've never seen them do so well. Now, it's going to be impossible for me to teach you this today in the AMA. There's no way I can teach you this in the AMA. You can take screenshots of this, and I'll give you this document, even if you're not in the program. I don't care, because a list of everything that we teach you is not going to teach it to you. You're going to have to come into the classes, come into the trade room, and see it every day. But I promise you this, that this is what we're going to teach you every single day. We're going to do it today. I'm going to do it quickly because I need to do it quickly on a few markets, but I'm going to do rapid fire, and you're going to throw a market to me, and I'm going to break it down. I'm going to show you where the next trade is. Okay. The next thing is understanding the order blocks and supply and demand and fair value gaps. This is the levels. So this is like when you build a house, you pour the concrete. And this is like the frame of your house. Like, this is the most important part. This is the second most important part. And then we go into the risk and management and the execution. So once you understand where you should be trading, or the side of the market that you should be trading and what you need to do, we're going to teach you where the trade setups are. And we're going to teach you how to identify those trade setups. And then what's going to happen is you're going to spend all of your time waiting and planning the risk on how to enter into the trades. and how to basically plan into the levels. Okay. Now I'm here to tell you that I will never take a trade for less than 5-hour multiples anymore. I don't do it. I don't take a trade unless I have 5-to-1 risk reward ratio. And I have the ability to hit that intraday. That's insane. How many of you guys would like to learn how to take trades where every time you put on a trade, you could get a 5-hour multiple on that trade? You might get stopped out a couple times on the entry, but when it hits, you hit with a huge ratio of success. If you do not enter with confirmation, then your risk reward ratios will drop. Your zone size will be a bit bigger, but you will most likely be able to get 2-to-1 or 3-to-1 on the trades. And I'm going to show you how. So what I want you to do, well, let's go to gold for a second. Let's go to gold. I'm going to go to this. So I'm going to go here. Here a second here. I just want to take a couple looks here at gold for a second. And I'll take a look at the S&P. Let's rather than me choose the market, which is not fair to you guys, let me pick you guys. I'm going to do rapid fire right now. And this is the level of accuracy that you can expect to become. Okay. Pick a market. We'll do futures first. S&P. Everybody wants to look at the S&P. Anybody want to look at the S&P? It's a favorite amongst men and women, right? S&P first. Let's take a look at the MES, okay? So the first thing I always do, okay, the first thing we always do is I just need to understand my ocean. The daily chart is your ocean. It's like you're in a really big environment, right? And you're going to set wind, you're going to set sail in this environment, but you don't really know which way the current is going to go, right? Like think of it as an analogy for a second. Think of the daily as like the ocean. You don't make your decisions on the daily. You need to understand what's happening, but you do not make your decisions on the daily. You need to know where you are relative to the daily. And right now we're in a daily pullback. All this means, this down move, is that we're in a daily pullback. We don't make decisions on this time frame. We can tell you right now that structure is up. We closed above the swing high. I can tell you right now that we are in a transition on the daily. Structure is up, which means by definition, if I had any long opportunities here, then I'd be in a position to trade them. Okay. And the structure on the daily's been up since here. So since the 28th, the structure on the daily's been up. This is all internal structure on the daily, but we don't live in the daily. So you don't need to be worrying about like, oh, making all my decisions on the daily. No, but we're going to teach you to know where you are inside the daily. Because if you don't, you're not going to understand why things are happening. You're not going to understand why the market's doing what it's doing. The reason we're getting a reversal is we hit the daily order block. That's why the pullback is happening. But you're not placing your trade decisions on this. You just need to know why it's doing that. The moment you understand that, and then don't get stuck in that. A lot of traders will sit there and get stuck on that, and they'll be like, oh my God, like, I don't understand this multi-time frame stuff, right? Perfect. We're going to make sense of it real quickly. Everything we do is on the 240. End of story. Why do we do everything on the 240? Because the 240 is the highest time frame inside the daily fractal. The daily auction is the most important thing for banks, institutions, and everybody that's moving money around on a daily basis. The flow of capital operates intraday. Anything outside of the daily is a swing trading and an investing stance, and you are no longer in the day trading realm. Everything daily down is a day trader's environment. That doesn't necessarily mean you're going to be scalping for 5 ticks, and that doesn't mean you're going to intraday swing. But for us, we make all of our decisions. Everything is based on the 4-hour time frame, period. We do not operate outside of that decision-making time frame. And we always understand that we are trading in the direction of structure on the 4-hour time frame. Now I'm going to do this for a second. I'm going to just turn this off because I think it's unfair to traders. I think it's unfair to traders to learn how we're doing this. So let's map this out in terms of structure. I'm going to do something here that you're going to see us do inside the trade room. And you're going to see me grab 2 lines. And I'm just going to do this for a second. We're going to start on the last big downtrend because that's where it's easy for us to see things. So you can see it right there. We're just going to go here for a second. I'm going to map out the structure, and we're going to teach you how to do this because you will not understand why this is so important. Remember, paying attention to structure on the 4-hour means something. If you look at structure on a 5-minute chart, it absolutely means jack nothing. If you look at structure on a 15-minute chart, it means nothing. You look at structure on a 30-minute chart, it means nothing. It's all too small for the big guys to be making clean decisions. However, if you do it on the 240 and then you use that information inside of it, you will change the way things happen. So what I'm going to do is I'm just going to draw a few things here. This trend went up, we pulled back. That's a strong low. I'm going to move it up here. This pullback was the strong high. Let's do this now. We're going to keep going now. We're going to go, this is what you call structure mapping. Okay, that becomes a strong low. That becomes a strong high. We go like this. That becomes a strong high. Right there, we wait for it. That becomes the strong high. You'll notice that the wicks don't close above it. We don't move it. Right there, we closed above this. This was a pullback that took out 2 lows. This to me would validate, for me personally, a new strong low. Took out the lows of 2 candles. This is now the strong low. There we go. As soon as we close below this level, we're breaking structure to the downside. Okay, we're going to continue down. Right there, we close below it. This is now the strong high right here, and now we start trailing price down low. We're going to wait for a pullback. There's the pullback. Okay, and the way that this works is that we will basically trade the order block on the break of structure down or up. We're going to go down. I'm going to go to current price, and we're going to keep going. This did not close above the strong high. Do you see this? Did not close above the strong high. We cannot move our price levels up. We're going to wait here. We're going to wait. I'm going to wait for the downtrend to happen. Okay. You need to notice how they never close below this level. Interesting. Why are they not closing below here? These are liquidity grabs. We're going to talk about that in the classroom. There's the close. Okay. So this is the highest high in the pullback that led to the break of structure. This is now right here. We're going to do this, come down, keep going. This is the highest high before the break of structure. This is a boss break here. We'll talk about that. This is the order block inside the 240. I'm going fast because obviously I need to get through to the edge of where we are. And we'll go down, and this is now a new break of structure. You're going to see this is a break of structure here. We never pulled back, so this just keeps closing down. We never had a pullback, never had a pullback. There's the downtrend, and that's what I wanted to get to. So this is now the break of structure down. Boom, boom, boom. So this is not a pullback. This is a pullback. This is a 2-bar. Hey, Jim, you do your 2 bars like this? You do 2 bars, yeah?
I would consider that a pullback. Yeah,
yep.
It's that second bar is pretty.
And it's second bar, and it's basically a significant distance up inside that leg. Yeah. Normally, what we want to see is we want to see it break the highs, 2 bars, or have a significant distance in the leg, or have an inside candle, inside 2 candles like this for us to dictate a pullback. That to me would be the pullback. And that to me is an order block. So let's talk about this trade here for a second. This is a great environment for us to discuss. So this happened on the September 7th. For me, what this tells me is that structure is down. We broke below a strong low. This is a strong high. This is my environment. Why is this candle so important? That's what you should be asking yourself. And this is what we're going to start teaching you inside of the price action class. Like, why is this so important? Well, that's an inducement bar. That's a fake out candle. That's what we call inducement. It's called smart money fake out. You can call it whatever you want. It's truly just inducement. It's the last up move before the down move that shifted the highest break of structure. It's where they primed the pump. They cocked the barrel. Yeah, and it's basically, think of it as like a shotgun, and you pull the hammer back, and then you pull the trigger, boom, and you shoot the market. That's what happens. They're basically cocking the gun knowing that they're going to drop it. Well, that's important information for me. And there's two levels here. There's a supply zone here. Think about this candle here. It's a down bar, but it's basically the wick is like this candle's way, way up there, and it's a big level of supply. To me, there's two levels here that are important. And I'm going to draw them, and we're going to talk about this. So there's the order block, and this is the supply zone. Now, these are 4-hour time frames. Okay, these are 4-hour time frames. We don't trade those by itself. Okay, why? Let's just talk about this for a second. Let's just talk about this environment right here. When it came up into this level and it reacted all the way down, and then it came all the way up into that and then did that. Like, I don't know about you guys, but that is a significant move from here to here. This is a significant move from here to here as a day trader. These are 4-hour charts, but we don't live in the 4-hour. We plan the 4-hour and we drop our levels down. So let's go back. So let's just go back to the 60. Okay. And now what you're going to do, I'm going to turn the opacity down a little bit so you guys can see this.
Probably turn off the swing too.
Sure.
I think we need it on this one. It'd be easier to see.
Sure. So I just want to show you here that, remember, these, pretend we're here. Okay. Pretend this is, we posted these actually in Discord. I don't know if you want to go back and find them, Jim, but remember, this is what we start with. We start with the 4-hour is telling us that we should be shorting the market. We've got 4-hour levels of very, very strong probable short locations. However, if we took a short right here and put our stop loss, that's insane amounts of risk. That's just an insane amount of risk. If you look inside of this on the 60, you have the inducement candle here. You have the last up bar before the gun was primed and they shut the market. You have the last up candle here. These are inside of it that shot the market down. So when you think about this, like, we're using the higher time frame to tell us we need to look for shorts. The market is primed to short. You have a much higher probability of shorting. However, we're not going to take the risk of a 4-hour time frame. That's insane from a day trader's perspective. So we can come in here and we can reduce the risk down to the 60-minute. We can reduce the risk down, okay, inside of this on the 60-minute. Here it is again. That's the order block. I'll keep it here because these candles are inside this bar. So I will not move my other zone. That I cannot reduce the risk. Now, you have a choice to make as a trader. You could blindly just put a sell limit order here and your stop loss around that, okay? But you do not know if this level is going to hold or not. You have no probability analysis on that. You could put your order in the middle of the zone and put your stop loss there. What have I done? I've made my stop loss smaller, but if you're following the rules of money management, that changed nothing. Your risk didn't change. Your probability on the trade didn't change. You have no understanding if that market's going to go through this level and touch that one and react. You don't know if it's going to come here to the edge and react. Nobody knows that. We do not know that. Our job is not to know that. Our job is to know what we expect here. We expect a sell reaction to a high degree of success, but our job is to make a decision. How am I going to execute on this trade? So we can go down into the 15-minute and we can look inside the 15-minute. We can look inside the 15-minute and see, is there anything in here that is telling me that I could look to trade? There's an order block here. This is the edge of that order block here. That's the inducement that led to the drop. And we'll talk about this and we'll do it in front of you. And this is why, like I said, you will not learn this in one day. So do not try to come to this AMA and say, I'm going to learn this today. I'm exposing you to what we do today. And then I'm going to show you the trade performance so you understand that this should actually make sense. Okay. But what I'm going to do is I'm going to say, sometimes I will not reduce my risk down. I personally do not like to change my zones down unless it's absolutely clear for me to do so. In a situation like this, I would not. I don't see anything in here that gives me a reason to. I don't see anything that's standing out for me. And therefore, if I come up and I have a trade like this, you see how it reacts and it just stays like this, and it just, you see this reaction here. You get this, you could have entered here on the edge of this and got a short. You could have entered here and got a short, right? You had the ability to take an edge zone trade. You could do that. Let's go back and take a look at what it looks like on a 2-minute, because this is where we spend most of our time entering trades. Give me a second here. There it is. So right down there it is. So if you were trading, okay, this level on a 2-minute, a first touch entry would have put you right here. But to me, there's no confirmation here on this. I have no ability to see. What I'm normally going to look for is I'm going to look for the market to come up and break structure and give me some form of an indication that the market is primed to take a trade here. For me, if I'm looking to reduce risk, I know traders that will not do that, and they will just put a blind order, or they will enter at the midpoint. They will enter at the 50% of that zone, okay? Either way, you're not right or wrong. You just need to understand that if I decide to enter at the 50% of this level, okay, give me a second here. I don't know why. There it is. If I decide to enter at the 50% of that zone, then my entry would have been here. The trade would have been right here. I know a lot of traders in our program that do that. We've taught that. Therefore, your entry would have been right here on this trade. And the way that we enter would have been right at the 50%. And your risk reward on that trade would have been right here. And you would have been able to get almost, take a look on that. You would have almost got 3-to-1 on that trade. Okay. If you would have taken that trade at the 50% entry. For me, I did not have an entry pattern on that zone. So I would not have traded that level. Okay. I would not have traded that zone. For me, if I was a confirmation entry trader, I would have had to pass on the first one, which is fine. It still yielded 2-to-1. Okay. On this trade, though, the upper level, I'm going to remove this now so you can see it. This was the bigger one at the top. And for me, if I'm going in here, I'm going to show you the way that I trade these and the way that I plan my risk on these. I don't go down to the 1-minute. It's too noisy for me. I go down to the 2-minute. And the 2-minute for me is much better because it's cleaner for me. I'm going to map out the structure. Okay. This is the pullback here. Okay. This is the pullback here. Okay. This is all internal. So this to me, I would need to see it break this level. For me, I would need to see it break this level right here. This is the strong low for me. And I'll teach this in the class for those of you that are wondering this. We're going to do some AMAs on this. This is the strong high. We never cleared above it. That was the stop run. That was the stop run that basically led to the inducement. And then basically the way that this works is this is all internal. This is all internal. This is all noise. Okay. This is the stop run. And that was the inducement candle that led to the break of structure. So what I'd be doing is I'd be looking at the order block right here. This order block is inside of that order block, which is inside of that order block, which means this to me would be the area for me to enter. And I would place my newly appointed zone right here. Oh, wrong draw tool. Right. That would have been my entry. And the way that I normally place my stop loss on these is 2 times the risk on the zone. So the way I place my initial stop loss is I will take the zone and I will basically put my entry at the edge of the order block, and that'll be my risk. That'll be my trade. So that to me is the way that I take the confirmation entries. And normally I will go to, this hit. The reason this hit was because this was the 4-hour that hit. So this came and gave you 5-to-R multiple. This is a 5-R multiple trade. Now, why would we try to get 5-R on this trade? Well, it all boils down to the 4-hour. If I'm coming down and I'm going to take this trade in here, I'm going to draw tools remove all. Okay. If I'm basically going to have a strong high right there and a strong low, and then they close below us. So there's the strong low here. Okay. They're going to try to attack down here. The goal is, if this level is going to hold, the job of the market is to respect the strong high to attack the low. They have to try to continue the trend. And that's why it came right down into this area. So I would normally come down and look at the structure on this, right? If you look at the way that this reacted, this came right down and they came right down into the pivot low. And so this would have been a 5-hour multiple trade that we would have called in the trading room. And the only difference is how you enter the trade. You could have chosen either entry method and it would have yielded you a profitable trade on any of the setups that I'm talking about. But this is the order block. And so if I want to go inside that order block and I want to see, okay, if I'm going to take the most amount of risk on this trade, I'm going to use a 50% entry. Oh, wrong one. I'm going to take the 50% entry on that zone. That is if I'm going to do a first touch entry, that is going to be my way of reducing my exposure to the risk, but it doesn't change the probability of the trade. Okay. The probability of the trade stays the same. The only difference is that if I enter on a confirmation entry inside of that level, I have the ability to see that structure is on my side. And I'm now taking a trade with the highest amount of probabilities. That is the difference between confirmation entries and first touch entries. But at the end of the day, we're still spoon feeding you that trade. You would not have to worry about missing that opportunity. Let's go to copper for a second. Jim, you took that trade on copper, yeah?
Sorry, I can't find the mute button. Yeah, I took that trade. It was a good one.
You took the wick trade here.
Yeah.
So let's talk about that trade. Let's map out the structure. And let's map it out from here. And let's take that last highest high. That was the low right there. That was the strong low. So let's go right here. So that's the strong low, and that's the strong high. If it breaks this low, we're going to start looking for shorts. So let's just wait for it. This is all internal structure. See how it didn't close below? That's called a liquidity sweep. That's an inducement. That's done on purpose. They're trying to suck the orders under the strong low for the last move up. And then what'll end up happening is they'll prime down. They'll sweep it. So this is now the strong high. And we trail down. Let's keep going. So this to me is a great example of an opportunity for a trade right here. So this is where we plot the level. There's the last inducement candle up that led to the break of structure down. And then this is not a pullback to me. That is not a pullback to me. So I would not look to trade that. And this is the pullback here. This is a 1-bar pullback, Jim. I'm not sure if you led to that. Is that if that was your that's a pretty decent pullback. It's a significant leg up.
Yeah. I'm not sure. Yeah. I'd have to look at it.
Yeah. So let's take a look. I don't think we did that because it didn't break 2 highs. Yeah, I normally don't mark a pullback unless it breaks 2 highs. It has to break 2 highs to me. If you notice that the way that this did not break a high here. This did not break any highs. This only broke 1 high for me. So when I looked at this trade, this is all the impulse leg for me. And so this was the actual order block that led to the break of structure down. And this was the planned trade. This was the continue down. We continue down. There was no, now this is where they primed the pump. This is where they came up. And this is where we have the 4-hour. And this is something that you need to understand. If you place your order to sell here and you put your stop loss above that, you do not know if the market's going to react off of that or not. We're going to try to see if we can reduce our risk down into the 60. We're going to go down into the 60-minute. And you can see here that this is this order block here, but this is the order block that led to the breakdown. That was the big order block that led to that breakdown. So what I'm going to do is I'm going to draw 2 zones in here. I'm not going to remove the 60. I'm not going to remove the 4-hour. I'm going to just put the 60-minute zone there. So you can see that that's a zone within a zone. And now I'm going to go down into I'm going to go down into my 2-minute chart. This is me. This is how I do this. Now let's go up. I know that that's the 4-hour and I know that that's the 60. If I wanted to, I could basically do it like this. I could take the 50% of that zone. Give it a second here. I could take the 50% of that zone and I could put an entry directly at the midpoint. But that is still a first touch. That is not a risk reduction. That is not that is not increasing probabilities. Let me just say that. That just changes the stop size of the level. Okay, so it changes the stop size. You see that? You would have been a great trade either way. But I want to go in here and I want to talk about if you're trying to add probabilities to your business versus taking entries that are higher risk. Let's map out the structure. There's the strong low. There's the high. Okay. I need to see them change the structure. Okay. I need to see them change the structure. They did not close above this. You notice that? They could not close above. That's the inducement. That's the liquidity sweep. Okay. They could not close above that high wick. Okay. However, they did make a higher close. So technically, that closed above there. So this now becomes the strong low right here. Okay. Let's do this. Now, if you look here, this structure came down and closed right there. You could have entered, okay? You could have entered on that order block right here. Let me just explain this. As soon as we close below this entry, okay? Remember, this is all the zone. But as a sniper, I'm not trying to trade the entire zone. I'm not trying to sit through all that shit and sit there. I hope it works. Oh God, baby, I hope this trade works. How many of you guys have had that self-talk? Please start going in my favor. You take the entry here, or you take it here and it starts working and you're like, oh shit, right? So what I'm going to do is I'm going to show you where the opportunity is. This was the close that broke the strong low. That is the most important part of this entire confirmation environment, which then opened me up for an order block at the level. I know traders that will basically enter on the break of that. And then this is the order block right here. So that's the trade entry. For me, that would have been a confirmation entry right there. And the risk on that would have given you right here. I normally take 2 times the stop size. So I'll normally take on that'll be my stop right there. So that's just for me giving enough wiggle room on the trade. Right there. So that just gave 2 to 1 right there on that trade right there. Now, if you entered mid zone on that, you would have probably got a bigger risk reward on this trade, but you don't have any probability on your side. You don't have any probability on your side. So the difference is that you don't know if it's going to work or not. You have no crystal ball. You don't know that. And you have no way to gauge if the trade's going to work or not. So I'll give you an example of a couple really huge trades that happened this week on the euro. Let's go to the euro for a second. Where was the euro dollar? This is the 240. Do I have a data issue? I think I have a data issue. Yeah, I had a data issue. So let's talk about this for a second. This entire section in here. And I want to go into the Discord and I want to talk about the trades that I posted on this, because this is some pretty amazing trading and I'm going to share with you on this. Instructor pre-plan trades. I want to go up to this. This was earlier this week. This is on the 11th. So 4 days ago. Right here. I posted this. You can see here, the daily is up. We closed above the structure on the daily. And then what ended up happening is we had structure breaks here. We took out the highs on the 240. I'm going to go in and I'm going to show you this. And I posted this. This was zone 1 and zone 2. And I said, setting up for 2 new longs on the euro. Okay. So let's go into that. This was right here. This was the strong high. And this was the new strong low that led to that break. And that was the break right there. Okay. So now I was looking at it like this. Okay. I was looking at it like this. There was an order block here on the 240. Okay. And then I think, can we just pull up the actual picture again? Yeah, it was the order block at the lows. I just plotted another new order block down here because this was a gap that never got filled. This was a gap that never got filled. And I said there could be a good reaction off that order block on the lows. So let's take a look at it. There it was. I put down 2 order blocks because this led to the break of structure. And I posted these. Now, to a new trader, they're going to get excited. And they're just going to blindly take an order in here. They're just going to blindly trade this. And they're going to just, like, a new trader is going to say, well, Sean, you posted a trade in the trade room and what happened? To a new trader, you would think that there was a stop out here. This is a 240, guys. We don't trade the 240. We use it for big areas. We use it for where the levels are. So we can go down into 60. Okay, we can go down into the 60. And I reduce the risk down to the 60-minute level. And this was the 60-minute zone right here. Then I go into my 2-minute. And I just live in my 2-minute chart. Okay, so let's do this. Now I remember this because I said this was the 60. We have no way to understand this, but this was the first break of structure. This was a chalk, which means we would have taken a trade here. I would have taken a trade on this. I would have taken a trade on this any day of the week. Okay, I would have taken a trade there, and that was a stop out. So let's just do this for a second, and let's write that. Okay, that was a stop out. Okay. And then what ended up happening? We came down to run the stops. Right there. That was a stop run. And they broke the structure again right here. Which means this order block is the next trade. So I'm going to draw the box. So that would have been the trade right there. That was the break of structure after they swept all the stops. And I would have entered here like this. I posted these so that you can see them in a Discord. You can't go back and you can't fake it. I mean, I posted those. And if you want to nail down the order block is this size. Normally I'll double the zone risk from a confirmation entry perspective. Like this, that'll be my stop, or I'll do 1.5, one of the two. You can decide. You need to have enough buffer under the swing low in case they come down to sweep that liquidity one last time before they prime the pump. You don't know that. This would have been the stop here, about right there. That was a stop. And then this one here would have been the next trade. Okay. So that came up to a 1-to-1. And I don't know if it went all the way to a 2-to-1. I can't remember. But this one went 1-to-1, okay, on this trade. And then it came down to the other trade. So this would have been a 1-to-1 break even. You'll go to break even at 1-to-1. I mean, no, you don't need to stay with risk after a 1-to-1. If it's going to come, it's going to come. So take a look at this first touch. I will not trade that. If I'm looking for confirmation, I will not trade it. What I will do is I will wait for structure. to come down and break. We have no structure breaks. Where is it here? Right there. And where did it happen here? Let me see. Right here. This was the structure break right here. So they came down to the level, boom. They broke the structure and they came down to test the order block. So this is exactly what I posted inside of the Discord. You'll see it. The order block is here. So you can draw that. How do you see the structure break? You can come down, you can see the market's coming down, boom, hits the level. They break the structure and they come back to test the order block that led to that break of structure. If they fail here and they take out the stops, that would have been another stop loss. And then I would have waited for another break of structure lower down here. You got to remember, the job of the market is to fill the liquidity. It's not to make you right. It's not to basically prove that your level is going to make you money. The job of a market is to find liquidity at price. And if it shows you that the liquidity couldn't hold here, then the job of the market is to go down here to see, is the liquidity going to hold here? Just like the job didn't work here. They came down and found some liquidity here, gave a little bit. Market couldn't sustain itself. It's not your job to be proving right or wrong. You have no control over the market. But you have control over risk management and you have control over probability in management. So if I did not get a winning trade in this level, then I would have waited for the market to come down deeper, taken the stop loss, taken a structure break here, taking another order and take another stab at that. Because most of the trades that you're going to take on a confirmation entry are going to yield you huge R multiples. Okay. So let's think about this. This is negative 1R. This is plus 1R. So that's a flush, right? You didn't win, you didn't lose on that, okay? But on this trade, okay, on this trade, let's double down on the stop size for a second. And let's put the risk reward here. That's a big banger trade. And the difference between taking a first touch entry and a confirmation entry is by letting them break the structure and then coming back to retest the origin of that order block, the market is showing you that support is on your side. That is the only difference between taking excessive risk on the edges of the zones or the midpoints versus taking a confirmation entry. Now, I'm not cherry picking a trade here. This is stuff that I posted. And I will continue to post this stuff. Look at Euro USD setting up, and then I go to live trade picks, Forex. I posted the Euro USD hit 4 times, 2 stops, 2 wins. So what did I post here? I posted this, stop out, win, stop out here, and then another win. Yeah, so maybe I did post 2 stops and 2 wins. Either way, you get the point. You get the point of it. The point is I posted these for you to learn. Okay. Now, we trade everything. But for me, it doesn't, how do you manage trade after hours or during the night? Well, we will post alerts. Yeah, so that's a great question. That's a really great question, actually. So you don't know when a level is going to hit or when it's not going to hit, right? And you're not a crystal ball. You got to sleep, and you can't hold market trades into the close. Working with prop firms, right? If a prop firm does not allow you, like, let me just... If a prop firm doesn't allow you to trade through the close, like Apex or any of these other process, something like that, you have to set an alert. So let me explain to you. Let's just go down and map this out now, because this was the strong low. They just broke it. This is the this was the strong high. They closed above it. That is the strong high. So right here on the 240, there's a huge short brewing. Huge short. This is a new trade. It's not in motion yet. That's a 240 minute. That is a short that is asking to be plucked. They came down. That is the strong low. So if the market gets up here, I can promise you that this is going to be an opportunity for us to plan a trade. That's a new trade on the euro that will be posted in our Discord. I'll go down into the 60. Is there anything I can do to reduce the risk in the 60? And the answer is not really, no. There's no, like this is right at the edge of it. So you could post another zone like this, but it's inside of it, right? That's an inducement candle. There's a 60-minute inside of the 240, yeah? So you have a choice. You can enter at a first touch. Like that. Like that. Take the 50%. But you risk, okay? If you take the risk, your risk is the same. Your stop loss is smaller, but your risk is the same. There's two types of trades here. You can enter 50% on both those levels, right? Nothing wrong with taking a stab at that. Or if you're like me, then I'm going to wait. I'm going to wait till I get up here. And I'm going to wait for this. Right? Or I'm going to basically wait for the market to come up like this. Sometimes if the market does this, boom, they break the structure. If you have a small swing like this, and it's basically a small break, you can enter just shorting at the break. You don't need a retest of the highs. If it's a small level, you can just enter short here, put your stop loss above the high, and then just, it just depends on how big that is. Sometimes it'll come out and break structure here and then come back. You never enter outside of your zones. You never enter outside of your zones. Okay. So the only difference between entering, say, at the midpoint or at the edge is your risk, your probabilities don't change. Your R multiple will change. The expected R multiple on this trade would change, but your probability doesn't change. And that's the difference between deciding how you want to enter the trade levels that we put out for you, right? The key here is that we're trading with very, very small risk in very big time frame levels. That is the difference. And if you go into our stats, I haven't taken trades in here and logged my trades in a long time because I've been busy with other meetings, but Jim's been running the room. Like we've taken, since we launched Gap, we've taken 73 futures trades and 45 Forex trades. And basically, like we're sitting at a really, really, really big hit rate, right? Like we're hitting at a big, big hit rate. Now, here's the difference, right? Like we take pictures of all the trades. We post them in the documents. Like we have nothing to hide from anybody. This is not some, did you guys catch that trade? No, every one of these trades was planned in advance. We post them in the Discord. The Forex trades, like we post them in the Discord, but we also take the screenshots. Like we try to document the transparency better than anyone you're going to ever find, because the whole point of trusting someone to teach you something is, are they actually doing it? Are they actually trading it? Are they able to show you that you can succeed with this, right? Are you able to win at this? I didn't ask you to come in here and just believe me. I came in here to look at what we're doing and you judge for yourself. Is this enough information for you to want to learn this? Because I can assure you this, that you don't need to be a Jedi to learn it. You just need to come in and participate with it. And let's take a look here. Live trading picks. Take a look at what this guy do here. It's a student picture. It's a student pick. I don't know if it's going to load, but give it a second here. Yeah, so that was a student picture. I got a lot of my graphics cards getting hammered here right now. So either way, pre-planned live trading picks for futures, hit 1-to-1, euro here, missed the crude trade, 1-to-1, right? Came in here. Students, like I can show you as many pictures as you want from the students taking trades. I can show you, the levels that we're posting. It just depends on what you're trading. It doesn't matter. All we're going to do is spoon feed you the trades. We're going to spoon feed you the trades so that you can basically come in and follow what we're doing. And you can just learn from the masters teaching it to you, and basically just, you know, like we're basically just going to show you where the levels are every day. We're going to teach you how to map the structure, right? We're going to, you know, teach you how to time your entries. We're going to teach you how to take the right trades. And that was a banger trade. Banger trade. That was a banger trade. Big trades. I'm not interested in scalping for a few ticks. I'm done with that. I met with some really big traders. I seen what they were doing on their accounts. I peeled the wool off my own eyes. I put some humility into my own approach. And for me, I build a lot of systems, but this is the key to big money opportunities. Like this is like, if you're going to learn a method and you're going to master something in your life, I truly believe this has to be it. And stats don't lie, guys. Like, we document everything pre and post trade. And we're not sitting there, you know, just, I hope these trades work. Like, the concept of live trades is you can see it as it's unfolding, before, during, and after. Okay. So as a ploy on this, right? I mean, I can go over any markets that you want. I can take a look at crude hit today, crude hit on the 240. So this was the swing high that led to the break of structure. This was the demand zone on the 4 hour. There was no order block. Well, technically this was the order block. This was the last down candle. This was the cock and gun. This was the last inducement candle that led to the prime pump that shot crude this way. That was the fake out. That was the liquidity grabs from all the retail. They took all the retail here. They swept all the stops off that last pullback. They took that inducement and they lifted it. So what we're doing is we're looking at this order block saying, okay, if we're going to basically trade this, can I reduce the risk down? There's the order block inside that, and that was the edge today. Now, that was a banger trade. Now, if you were a first touch entry trader, you would have caught that. If you were a confirmation entry trader, you would not have caught that. But either way, the level held. And that's all that matters, is that you start to understand why that is being held. Because this was the inducement that led to the break of structure. This is a strong high. This was the last fake out that led to that prime pump. That's the cocking gun. That's the cock of the hammer. Boom. And therefore, that is what you need to learn. You must learn this if you're going to become a great trader, because that will tell you to get up in the morning on your 2-minute time frames and not be like, well, why did that trend stop? Like, why are we in an uptrend today? Because it came out of a 240 order block, period. There's no other explanation for that. Give me another market before we shut down for the day. Give me any market. I'm going to tell you where the next trade is. Give me a market. NG, natural gas. Let's take a look at NG. All right. So let's take a look at the daily. Just so you understand the daily. The daily is in a range. So the daily has been in a range for the better parts of the last year. This is the top of the range. And this is the bottom of the range. We're not in any trends. We're not in any trends. But the daily broke down here on the lows. And this was interesting because I put this in the Discord. You just wouldn't have caught this unless you were a first touch entry trader. The daily shifted to an up structure at the lows of the range. Perfect. We don't care. The daily is not our decision time frame, but it's nice to know that. Now, what's important you understand is that the 4 hour needs to be our dictation. It's our 4 hours. So let's just put that as the daily. Okay. And then, okay, this is the pullback. This is not a big enough pullback. This is not a 2-bar pullback. That's a 1-bar pullback. So this would have been all the impulse leg. Boom, boom, boom. This was the 2-bar pullback. This was the lowest low. This was the break of structure here all the way through. And so basically this became the lowest low, and this became the next lowest low that led to the break of structure. Okay. So when you look at this, let's map this out. It's going to come down, boom. Now, I know some people that would map that as a break of structure because new traders would see that as a pullback. The issue is that it's very small. It's a 1-bar pullback. It's not really something that, is a huge pullback. So you're going to look at this as your leg. And this is definitely the pullback here. So if you look here, this is the pullback here. Okay. And then this becomes the lowest low. So this becomes the strong high. We're going to teach you how to map structure. Okay. So we're going to just teach you how to map the structure. That's a structure map right there. We're going to come down. We're just going to go bar by bar so you can see it. Boom, boom, boom. There's the close. So as soon as that happened, this order block down here at the low would have been your first opportunity for a trade. This is the order block on the 240. Okay. Then it closed above. So we're going to keep going. This moves up. That becomes a strong high. Okay. Boom, boom, boom. We never came down to it. This is the pullback. And that's the didn't close. There it is. There's the close. So this becomes now the strong low. Okay. And this is now the strong high as we move it up. And so we're on the right side of the 4-hour and we're on the right side of the daily, right? I'm going to draw this for you guys so you can see it. That's the structure. Boom, boom. That's the pullback. This was the strong high. And this became the lowest low that broke structure. That's just all you need to learn when you learn structure mapping. So we never take the order block that is overlapping the break of structure. We always take the inducement that led to the break of structure. So this is the order block here. This order block's inside of it. This order block's inside of it. Yeah. So remember, this is the low of the range on the daily. And I'm going to just draw the zone so you guys can see it. This was the order block right here on the 4-hour. Okay, so let's go down. They came back down. Let's go down to the 60. Okay, they never did hit it here. They never did hit it. Missed it by a couple ticks. That's fine. Let's go back to the 240. If they break this structure above, right there, there's the break of structure. So this now becomes the new strong low. Right here. That becomes the new strong low. And that order block, I'm going to tell you why I would not map a trade in this location, for me personally. I know that some people posted it. I know, Jim, you even covered it. But I'm going to tell you why I wouldn't have posted a trade here. I'll explain why. Because this candle, this order block is inside the high-low of this range. That's a really difficult read. And I just have a really hard time trading along that order block when we're at the highs of the daily range. Right. And that's why it smoked through of that.
Yeah, we took a break even on that one because there was no follow through because of that. So.
Yeah, and there's no follow through because we're at the high of the daily range. And this to me is a dangerous order block because you're inside the high-low range of this sweep. And so that's why it's you're inside that inducement on the strong low. And that's a difficult read, and we'll have to teach that in the class when you see those high-low range. It's an outside bar, you can see it. Takes out the high and the low of the prior candle. It's a really difficult read. But if you think about this order block here is still in play. This order block is an inducement. You don't know if it's going to come down and break structure here. This was the last strong high. You don't know if they're going to come down here, give a confirmation entry and rip back up and don't close up. You don't know that. The only time you stop trading long is if you close below this level. If we close below this level, we would now start looking for shorts. But until we get a close below that level, if they came back down into this is a very strong location. And this is a liquidity sweep into an order block that led to that break of structure. This is more of an advanced topic, but this is something that we will teach. That's natural gas. That's where we're at right now. I'd be looking to plan the long between 640 and 6. Expecting some type of reaction out of here because we're at the equilibrium of the daily range, right? We're sitting here. This is the daily top. And this is technically the lows on the daily bottom, right? So, you know, in the middle of that, you're near the daily lows. Like, and that's just how I would see that. I would plan the long on that to be effectively there. This is no longer valid. Does everybody understand that? I would be planning the longs right here. So if I go down into the 2-minute, right there, I'd be planning that. You have two ways to enter. You could enter right at the first touch of that level. You could enter at the 50%. Right there. You could enter at the 50% line, or you do what I do. I wait for the market to come in and show me some form of a break of structure, take the order block or take the break of that structure with my stops here, and then I catch a big banger. Right? Like just because I have a 4-hour zone here doesn't mean my risk needs to be that. It just needs to be, I'm expecting a big reaction out of this level. So what I need to do is I need to wait for the market to show me that reaction's kicking in, give me really small amounts of risk with huge reward potential. And what if you did this? Like, what if it came in here, gave you the break of structure, you put an order block, they came in and they broke down, they consolidated, they gave you another break of structure, came to the order block, and then you got 4-hour multiples. What most people don't realize is you're so stuck on being right. Like if you can trade for 2-to-1 or 3-to-1 on every single trade with very small risk, you can take a stop out from time to time and it doesn't affect your business. Like it doesn't affect you. That's the difference between what we're doing. Like I've seen a zone give me 3 or 4 opportunities before it really kicks in. Sometimes I see it give you 1 opportunity it kicks in. You have no way to know that. You need to write down on your desk, every time I have an opportunity, I'm going to trade it because I don't know if that's going to be the one that gives me 4-hour multiples or not. You could have 2-3 stop outs in a single zone, and then all of a sudden the last one gives you 10-hour multiple. I've seen that happen. I've seen a huge trade on gold where like I got stopped out twice in a row. I had 1 stop out, 2 stop outs. I took the next trade and it was like 7-hour multiple. It was massive. Massive. Because everything's about the 240. You're trading the banks. You're trading where the banks are priming the pump. Give me another market. Did I cut into my time here? No, I got enough time. Perfect. Give me another market. Gold. Let's take a look at gold. All right. That was originally the first structure mapping that we did. These are some big shorts that we planned here earlier. This was the 4-hour, and then we went into the 60-minute, yada, yada, and then it broke down, and then it gave us this new break of structure here. And this was not a pullback. And then it became a pullback, Jim. Like this here, and then it took out several highs. This became the pullback here. So what ended up happening is this came down, and then it did this outside bar crap that you and I always talk about, Jim, and it basically becomes difficult for people to see that. That becomes the strong low. And then basically
those
it's a
outside
difficult
bars are tough. Yeah.
It's a tough read, man. And then you get the close below, boom. Or you get the close below. So that's how it would have been. And realistically, you would have kept it here because the first trade that happened is this. This was the strong low. This was the new high. This is a wick through. It's not a true break of structure. That's the close right there. As soon as it closed above that, closed below, then that would have been your order block right here. That would have given you the order block right there. And then they came into that order block right there. They came into that order block. After coming down, you can see that. And then they rode through it. Well, let me just finish. Like that first reaction was massive. That first reaction was massive. Remember, this was the break of structure here. When it closed below that on that red candle, that was the order block here. Now, I don't like to take these order blocks when they're overlapping, but I mean, that's just 2 ticks. So what I did was I'll go into the 60, reduce that down. Let's just go into the 60 here. That was the 60-minute. And you don't really, yeah, the 60-minute was here, right there. So there's the 60-minute order block, okay? Now, you have two ways to enter this trade. You can enter at the, or three ways. There's always three ways you can enter the trade. You can enter it right on the edge of the zone. Okay, that is always the guaranteeing you're going to get filled. That you always guarantee a fill if you enter on the first touch. And it also guarantees you have the least reward potential on the trade because your stop loss is so big. The other option is you enter at the 50% line. Okay. You have no probability analysis other than your stop loss becomes smaller, but your risk reward becomes much larger, right? So think about this. If you entered on a mid zone entry, you know, there's your stop loss, right? Okay. Now it would have never hit you. It would have never hit the level on the mid level, right? It came in, it did not come in, and it came back in again, and then it hit the level again here. So you would have had an opportunity to wait for it to come up and hit that 50% level right there. And if you did that, it gave you 2 to 1. Came all the way down to a 1 to 1 here, and it came down to 2 to 1. So you would have had an opportunity to take 2 to 1 on that last order block before they pumped through. So there was two types of trades now. Now let's go into the 2-minute for a second. Let's take a look and see, was there any form of confirmation entry? And that's the reality, is did they give us any form of confirmation entry in this level? And I don't think they did this time. I think this would have been a missed trade if you were using confirmation entries. I think there it is. Actually, this is the, let me wait for it. Yeah, I don't think there was. No, there wasn't any confirmation because when they came out of the level here, this was the strong low right here. This was the strong low right here. And they broke it here. If it breaks outside of the level, you're not inside the zone. You have no form of risk reduction. You have no probability analysis. And there's, you know, then they come back in and they sweep the stops. And if they, this is the other thing you could have done. You notice how if it doesn't give you the confirmation here, you wait for it to give you confirmation after they take out new liquidity at the top. So this would have been right here. This would have been the opportunity right here for the last kick at the can. You would have had an opportunity to take a confirmation entry here. I'll show you where it is so you can see it. I think it's important that we do a lot more training on this, Jim, inside the strategy classes. That's the strong low. Okay, right there. So that's the strong low that basically needed to break. And there was the order block here. That was the order block that led to the break of structure was this inducement here. And we're going to draw a little box around it so that everybody can see where it is right here. Okay. And if you took a trade on that, would have been a close sale. Would have been a close sale for a stop loss. And it didn't even give you much follow through because this is where they finished and they drove it up. Right. So this wouldn't have given you much on that extra confirmation. But I mean, when I see a level like this hit here, and it's losing steam like this, like you taking a third or a fourth test on that if it doesn't happen within the first two tests, you're normally not going to get any more follow through. And this trade gave you follow through on the 50%. So you would have gotten a 2 to 1 at the 50% entry. Right. So this is not a failed trade. It just depends on how you enter. Let's go back to 240. Let's take a look where we're at now. So this is the strong high. So we are no longer looking for shorts on this market. No longer looking for shorts. Gold is a long market now. There was the break of the highs, and there it is. So this is now the strong high, and this is the strong low, and the break of the high happened right here. So this is the boss. Okay. And that's a demand zone that's literally sitting right on the boss. So if you wanted to get a little aggressive on that, you could plot the demand zone here to here, but that's not what we do. We do not trade demand zones outside of the boss breaks. So the way we look at it, we look at this. This is the last, that's the big trade on gold right now. And if I was to go down into the 60-minute, messy, nothing in here. Nothing in here that basically tells me clean action. So I will leave the 240 and I will either enter like this at the 50%, which will give me a trade like this. or I will wait for a confirmation and it'll come in like this. And then I'll take the order block entry with a smaller stop loss and it'll give me risk reward like that. And that's how you do this. Yeah, 5 minutes, way too long. You'll never get any confirmation on a 5 minute. You'll never get a break to structure. It's just you've missed half the move on the 5 minute. The 1 minute's too noisy, right? And the 2 minutes like a sweet spot. 3 minute, you miss trades. 1 minute, you take too many false breaks. I find the 2 minutes a sweet spot. You can use a 1 minute. You can do anything you want, but I don't go above the 2 minute. Me personally, I just see too many missed opportunities. And let me tell you, like, this shit works, guys. Like, I'm not here to try to sell you the sizzle. Like, you can sit there and question this all you want, but, you know, we've got over 100 trades documented since the end of July. 100 and something trades. Like, how many trades we got? That's 118 trades. And we're almost at an 80% win rate with a 1-to-1 or greater. Like some of these trades we're taking are 2-to-1, 3-to-1 trades. Like, and depending on if you're using confirmation entries, you can get up to 4 or 5-to-1. What is the accuracy for the 77% is a 1-to-1 or greater, Mohammed? Yeah. So like that's an exceptionally profitable model.
That's over a 3-point profit factor for those of you doing the math.
Yeah.
That's just at 1-to-1.
That's at 1-to-1. I don't trade for anything less. I don't trade for anything less than 2-to-1. I moved to break even at 1-to-1. I stopped trading for the small wins because I just see the big trades hit so many times. I would rather just take the stop out and catch the big bangers because the big bangers put the money in the bank, man. Like that's.
Yeah. And you can always, move stop when you get to 1-to-1. So you're not at risk and then just let it fly. Cause the ones that move, we've seen them really move, huh, Sean?
Oh,
they just go.
It's insane. It's insane. Like, I mean, crude oil is a great example of it.
Yeah.
Now, we missed it today, but I mean, it's a great example of like these levels hold, man. And it has everything to do with the market structure mapping. Like, I'll go back to this. It all has to do with structure mapping first, and then the levels, and then the risk management and the zone reduction. You don't do it backwards. You don't do like, oh my God, I got a level there. No, you have to understand structure mapping. And it's our job to teach it to you. And here's the cool part. We do it all for you. Like that, look at MCL. Like this was planned yesterday.
Yep. That's the trade that hit today. And I was waiting for it to cruise a little higher to give us a little more room. And I was going to trade it with confirmation, but we didn't get the confirmation entry, which is fine.
Look at the date.
Clearly worked.
Look at the date. Yeah, we do these morning. In advance. Okay. Hi, Sean. How would a person that works 10 hours? Amazing, Jeff. Alert lines. We have an indicator that's free. It's on the ARC website. You set alerts. You set up NinjaTrader to trigger you an email. And the way you do it is you set up the alerts. It's free. I made this indicator free on purpose for everybody to have it. It's a free indicator. Everybody can go here. If you're on Ninja in TradingView, they already have it. It's called the line alert indicator. Instead of you placing random orders, you just set the level and then trigger it as an email alert. So instead of us planning a level here like this, you got this level waiting for you. And let's say we post 10 trades today or 20 trades today or whatever. All you do is you go in here to the indicators and it's called a line alert. And you can basically, it's set to horizontal line. So whenever you use the horizontal line indicator and enable email, there you go. Now you need to set your email address up and I think there's a video in the members area for that and Ben can send you that. Or you can just have it as an alert on your platform, however you choose to do it. And that way you're not setting any orders. So when you go in here and you plot the horizontal line and let's say you plot it right there. well enough in advance that if you have time to get triggered, you get an email, boom, you get an order. You got a lot of time to plan a trade by the time it comes into this zone for it to give you a 50% entry or for it to give you a confirmation entry. You set alerts. I mean, you can't change the fact that you have a job and that you work, and you don't need to. But the whole part about this type of trading is that you cannot run a business scalping on a 2-minute chart and expect to run and be working and have another life. I set levels in the overnight, during the midday. Like, I'm in meetings. So sometimes I'll be in a Zoom and all of a sudden, boom, order filled, or sometimes I'll get an alert, order setting up. I get an email, and then you just go and you take a look and you plan it, because we post so many trades. Like, it almost gets overkill. Like, this is my watch list. I don't trade the bond market anymore. I pulled it off my watch list because I don't like the way it trades. I just don't like the small time frames. I just don't like it. But it works. Like, I mean, bonds really hits, and when they hit really big levels. I mean, for me, I just don't like trading markets that don't move a lot and don't move fast. And this is my watch list. Like, for futures, this is my watch list, and Forex moves massively. Now, I know a lot of the members, they use Forex futures. So 6A, 6E, they hit, and they hit really good. So don't discourage using that. It's just, you have to choose. And then I trade all the majors. I trade all the majors and I trade all the minors. And Bitcoin futures is fine, but I don't like to trade Bitcoin as a price action market, because I think right now the crypto markets are heavily influenced by policy, and I don't think that there's any stability to the price action. Yes, they still work. I mean, we've planned some Bitcoin trades and they worked. If I'm going to trade a market, I need to know that it's got healthy price action. Like, Forex just has healthy price action. Futures has healthy price action. Bitcoin has price action, but at any given time, you get an XRP alert, or Bitcoin gets an EFT approval from Vanguard, and next thing you know, like, everything's out the window. It's a crapshoot, right? You can do this on any. I build a watch list, so this was something we built for all of our members. So you'll get access to this. I have a watch list here that has all of the futures, and this is already pre-built for all the Gap members. So anybody that's in the program, you don't have to build this. It took me days to build this. Here's all the Forex markets. Here's all the miners. And then here's all the perpetual futures. If you're a crypto trader, you could trade this. These are all Bybit's crypto futures. And then here's the main ones, Bitcoin and all that fun stuff. So if you wanted to trade this, you could. And these were shorts that we planned here, and they worked. They gave small trades, but they give profitable trades. But we don't live in that. We don't live in the crypto world if it's unpredictable price action. These were trade levels that we planned up here that gave a trade. But yeah, it's for us, it's really about trading healthy markets. Yeah, healthy markets. But that's all built for all of the members. So my only suggestion here is that we go back to understanding what you'll learn in this program. Is you'll never find this on YouTube, and you'll never find this trying to figure out somebody that's going to teach this to you. Trying to find a mentor that's going to show you this it costs me a lot of money. I bought program after program after program I actually learned this from Forex traders. So I learned how to read price from Forex traders that were trading, like, we're talking account sizes that would make some of you like fall off your chair. And I just soaked it up, and I spent over a year learning it. And then I spent months trading it. In fact, what I did was I spent months trading it on futures and Forex, documenting all my trades. And then I went to Jim. Yeah, 9 and 10 figure accounts. Yes. Yeah, like over $1 million balances. Yes. Yeah, absolutely. Yeah, without a doubt. And these guys are young kids in their 20s trading, $1 million, $4 or $5 million accounts. Yeah. It is the real deal, because Forex is the real deal. It makes futures look like a sandbox game for kids. Yeah, futures is really where the kids play. Yeah, Forex is where the big money is in the world. Yeah. But that doesn't mean you shouldn't trade futures. I'm not here to try to steer you into trading Forex. What I'm trying to tell you is that I took everything that I spent all my year of learning this and all of my own experience, built it into a program. Then I started teaching Jim this, and then we brought it into the program, and then we launched Gap. And since that, I've never seen Discord more active than anything that we do. Like I've never seen traders, doing things like I've never seen it, you know, more active than any other thread we have. Like it's just traders are just very active, you know, and that's because it's working very well for them. So all I'm going to do is leave this with you. We launched this a couple, like over a month ago or so, Jim. I think it was last month. We launched this and, you know, we've taken a lot of trades this month. I don't know how many trades we take this month. Let's take a look at how many trades since in September. These are just the ones you took, right? But since we launched it,
I didn't take a lot this week too because I was sick and all that. So
yes, but there was a lot of trades that we don't take, and we just post them in the chat rooms, and we just post them for traders. But I mean, if you look at now over the last month since the 15th. Sorry, guys. I'm just trying to look at the 15th. It's not letting me very well. All I'm saying is
because Google Docs does this.
Yeah, so let's just do 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 22, 23, 24, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 51, 50, 53, 54, 55, 60, 60 trades. We took 60 trades since last month at this time. Yeah, 60 trades in the last month that we posted. Yeah. August 10th was the first trade in the trade room. Yeah. Yeah. Yeah, with the confirmation, Bradley, good question. He's like, how many pips on the Forex? Small. I mean, if you go into the euro and you look at the last trade that I was posting, like if you look at the euro USD trade that we posted here, this this trade here was the last trade that I called in the trade room. Now I'm going to draw a box here. It was this trade here. And then if you go into that, the actual stop loss on this, there was a stop loss here. Look at this. This was the stop, the first stop loss that I mentioned here. So this was it right here. This was the stop loss. In a second here. That was the first stop. And then this was the second stop. This was the trade that hit, and it was very profitable. Yeah. And you can see the size of risk is not, it's not big at all, right? I would double this as my zone size, and that's the stop loss. Yeah, tight risk. Yeah, because these are confirmation entries. If you're entering on, you know, the 50% rule, well, your risk would have been here and you wouldn't have gone filled on this. Some trades you hit on the 50% and some trades you don't get. You cannot control that. Let me just stop. You do not need to have a crystal ball. So let me just explain this. There are some times where the 50% guys get their trade and the confirmation guys don't. You cannot control that, and you shouldn't try to. There's times where I get the confirmation entry like this, but the guys waiting down here with their 50% is they just didn't get it. Like it's just life. Like that you cannot control that. But what matters is that you know that this was where we were planning the trade, why we were there. This all had to do with the daily, the 4 hour, down into the 60, down into the 4 hour. And so when you think about it, like you get stopped out here for what you get stopped out, and then you get like, I mean, do the math on this. Like, I mean, that's 4-1 right there, and that's only half the move. Like, there's a reason this is why we're planning the trades here. Like, we're expecting major reactions from these levels. And that's the accuracy of why we use the higher time frame to nail down. This is why I'm waiting gracefully here, because the daily is down. So this trade is a huge trade opportunity. Whenever the daily is down and the 4 hours sets up with a structure break like this, let me tell you, this is a banger trade. Like, this is when you can expect Huge freaking banger trades. Like I remember, Jim, when I called the last trade short on Euro, I remember it. I called it in the last AMA. It was the last daily time when we transitioned. We transitioned to the short right here, and it was in this move. It was right here. I can see it because I remember called it in the trade room. This was the test of the strong high. I called this to the tick, and I'm proud of that because it's exactly what our strategy is. It was a false break, right? It was a false break on that strong high, and we broke down. And when we got this break of structure here, I'm going to draw a circle on it. I'm going to draw a circle right there. And what we did was we went into that, and they broke the structure right here. I can see it clear as day. I remember I'll give you guys the recording for this. This was the break of structure right here. And this was the supply zone that led to the break of structure on the 40, the 240. So that was the zone. And if you go into the 60-minute, there was the order block on the 60-minute. Now that happened. Look at that trade. And this is, I could circle this again and see if I got a confirmation entry, but the 50% hit like a crystal ball. And whenever you're in line with the daily, holy moly, man, like you're asking for a huge opportunity. Right there. And this was the confirmation entry. They broke structure. This came right in. They came in and they broke structure right here. They came down and they cleared that chalk, and they came back up to test the order block right here. That was the order block that led to the chalk. So normally what I would do is I would have my zone like this. That would have been my order block, and I would have put my stop above the highs because it would have been slightly longer that. So this would have been my trade here. And if you were trading a 50% risk, you would have gotten a little better risk reward on that. And that was the trade. That was the last trade I called in the AMA. That happened live right here. That was a big trade that we caught, and was crystal clear with our strategy. This is our strategy. This is what we do. We look for the big bangers because they work a lot. And let's go to the 240 on the MNQ. Let's go to the 240 on the MNQ. Make sure I understand where I'm at on the daily. I'm all in internal structure. This was the last big structure break. So this is all internal structure on the daily. But if you see how we break down here, if we take out these lows in here, then any structure breaks down on the 240. Any structure breakdown on the 240 is going to be really big trades to the short side. So let's just move the structure mapping here. I'm just going to go bar by bar just so I can play it out in my mind because I need to see it. Didn't close below. There it is. So that was the highest high that led to the break of structure. Down. That's not a pullback. To me, that's not a pullback. That's the pullback there. So that's the strong high. And we broke above it. We closed above it. So this is now this is a 1 bar pullback. It's not a pullback to me. So I got to move this up. Let's take out the low of the 2 bars. Take out 2 bar pullback like that. So there's the break of structure down. So this to me would be the break of structure down. And this is the order block. Wrong one. So take a look at the reaction out of this. Like, take a look at that reaction out of this level. Let's go into the 60-minute and see. Didn't give any clear day. Do you see how there wasn't any This 60-minute was the same. So if you entered on the 50%, oh, Jesus. Take a look here. You would have just missed it on that one, but you would have caught it on this one here, and it went all the way down here. So if you entered on the 50%, which we talk about, that would have been your stop, and you would have got 2-to-1 on that trade. You would have got 2-to-1 on that trade, no problem. Now, as a confirmation entry trader, I'd have to go in and see if there was a break of structure on that. So let's go in here. So this was the first break of structure outside of the zone right here. That was the boss break. So this would have been the order block here. And that would have been a very tight risk. So you would have been able to get, this would have been the order block here. Okay. So that would have been your trade entry there. And if it would have ripped and down, you would have had a huge banger, but it didn't. It just gave you, you know, maybe a 1-to-1 if you took the trade. Okay. However, let's go into this for a second. The next structure break up, okay, happened here and then here. So right here. So take a look at this for a second. This was the last structure breakdown. These two breaks of structure in here gave an order block that was huge. Huge short. Right there. And that was the last trade. And I don't care about what you say. That's a big trade. That's a massive trade. You may not see that on the 4-hour, but that's 4-to-1. You know, like if you can show me your trading log and you're getting anywhere between 2-to-1, 3-to-1 on all your trades with a very high degree of risk and a high degree of winning percentage, I'd be more than happy to teach your strategy. Not being arrogant and being straight. Like, you come and show me your strategy and that you can hit a 77% win rate of a 1-to-1 greater or more over the last 150 trades, and I'll take my hat off to you. Right? But it's very difficult to learn this without having someone to teach it to you. And that was the banger trade on the NASDAQ. Banger trades. Now, where are we on the NASDAQ? We're still doing things. Let's go back to the 240. This was the, that would have been the strong low right there. That was the strong low, and then it came back down. Interesting. We just broke structure. So this was the here, and we broke structure before, actually. That was the pullback. So after they broke it again, they broke it here. This is where they broke the structure here. You can see the close. But they're faking everybody out. They're taking out the strong high, and now they're taking out the strong low. So this market is priming itself for another retracement. This is basically a deeper pullback. It's all internal. This is a consolidation on the daily for a move down. And so the daily is getting ready to prime itself down. And the fact that the daily is getting ready to break structure down, and the fact that the 240 just set up short, wow, that's a huge trade at the highs up here. Now I'm going to go into the 240 to see. This is basically a huge short up here. You see this huge up bar? These two bars are down. This is a difficult read. This is an outside bar. Outside bars will always create a difficult read. So what do? You go into the 60-minute. You take a look. Is there anything on the 60? There it is. It's right there. It's a sore thumb sitting there screaming right there. That's the short. Waiting for it to be primed. Abso-freaking-lutely. Wait for that market to go back up there. By definition, the market will go back up there unless it creates new structure breaks on the 240, right? If we get a pullback, two candle breaks the high, and then they break this down again, that becomes the new high. And then we wait for the next order block right here, because you don't know if they're going to pull back or if they're going to do this. And then this becomes the new strong low. This becomes the new boss break. That becomes a new strong high. There's an order block in here. Eventually, they're coming up to hit the order block. They have to. Like they have to find the liquidity. This is what makes this strategy so effective and so repeatable. Because if you have a trading system that doesn't repeat itself over and over and over again, you do not have a business in the financial markets. You cannot build any consistency with it. The market has to come and fill liquidity. So as long as you understand why we're taking these levels, you'll be in a really, really good place. So right now, this will be the strong low, and I'll be waiting for a pullback. So what we're going to do, it's either going to come straight up here, which is often unlikely unless you get news. What will most likely happen is we're going to get the candle will close today. You'll get a high. The market will gap up, and maybe it'll keep going like this. Or on Sunday night, it'll pull up, and then they'll break the structure. And that's what will normally happen in a trending market. And then it'll be easier for you to plan the next trade because as soon as you get a new boss break, you get an order block that's right close to price and you get that next short. And that's what we're going to be waiting for all Sunday night. And we'll post it. You don't have to worry about learning this on your own, guys. All I want to know is, did you learn something today? Did this AMA kind of open your eyes to a different concept? The stop losses we take are very, very small. The wins we take are very, very large, and we have a very high hit rate, which is what everybody wants, which is what everybody needs. You just have to be questioning yourself are you ready to learn this? And I'm going to ask a poll, okay? So what I'm prepared to do is I'm prepared to reopen I'm going to make you a promise. I can guarantee you that you can become consistent if you learn what we're doing. You have to be willing to learn it. If you do not learn it, I cannot help you. So if you commit today, I can guarantee you at a company level and at an individual level that Jim and I can teach you this, and you can become really good at this, which can lead to very seriously changing your results as a trader. You got to ask yourself, if you're going to spend money somewhere, if you're going to buy something somewhere in this business to become the best, are you prepared to learn something that is very, very successful? Okay. Doesn't involve indicators, no lagging scalping, nothing. Okay. You must decide. Are you in or out? Because I can tell you right now, come Sunday night, Jim and I will be posting a new round of trades in here. And it'll just happen. It'll just keep happening every single day, every single week. And the market will just keep moving, and you're going to see futures trades and Forex trades and futures trades and crypto trades. And it's just going to keep repeating. It never, ever stops. You're never going to have no opportunity, and you're always going to be able to learn this if you're in the program. So what I'm going to do is I'm not going to post a link to buy, and I'm not going to do anything. I'm going to get you to run a poll. And if you answer yes on this poll, we're going to send you the discount link via email. Okay? It's only good this weekend. We normally sell these programs at like $5K. It's a lot of work to run these things, have instructors running trading rooms and filming videos and running courses. It takes a lot. So what I'm going to do is I'm going to basically open up a poll, and you need to tell me, everybody that's in the GAP program, don't answer the poll. Like you're here, you're learning. Anybody that's not in the GAP program, this is for you. If you want in, we will send you the link to buy at the discount. We'll open the launch pricing. Okay. If you're sitting there worrying about price, how much is this going to cost? You've already missed the boat. You've already missed it. If you're sitting there trying to figure out what's it going to cost, it's going to cost you a hell of a lot less if you take advantage of it now than if you just buy it at another time. Right? I think it's less than 3,000. Like normally we sell it at 5K. I think it's less than I think it's like around 2,500 or something like that. But I'm here to tell you that the best part about this is that We will spoon feed you the trades until you're consistent enough to do it on your own. And that's when the training wheels come off and you don't need us anymore. And isn't that money well spent? That's freedom. I promise you this, you will become the best trader you've ever been. It's a bold statement, but it will only work if you learn it. Now, if you put yes in here, don't dodge us. We're going to send you the link. Do it, because we need to get you up and running. We need to get you the workspaces. You need to get the line alert indicator instilled. Like, you need to have a few things done. So if you're ready, my team is going to spend the rest of the day today sending you these links. Okay. If you're not ready, you're not ready. There's no point. I mean, it's not that. If you're ready, you're ready. Now, can you type a Y in the chat box if you learned something today and you found this to be a breath of fresh air? Good. We're going to do more entries. We're going to do more deep dive. All of the members in Gap. Jim and I are going to do a deep dive training only for Gap members to basically spend time on looking at confirmation entries versus the 50% entry level. Yeah. We're going to do some detailed training on that. Okay. So there's a whole lot of people in here that said they're joining. Okay. But I know there's a lot of people that are already in here that are in the Gap program. So I know that there's a lot of less people are going to answer. Right. However, for those of you that joined that said, I think there's like close to 20 of you that said you want to join this. Be prepared for us to send you the link today. It's going to expire quickly. This is not a normal program. This is not some promotion that we were announcing via email. This was a on-the-fly AMA. If you want to join what we're doing, it's private. We're not trying to teach this to everyone who's not ready to learn this. I really don't have the patience to teach traders that are not willing to learn it. This is something that is meant for people that want to become the best that they can truly be. Okay. And I promise you this, like the magic will happen quickly because you're going to be in the trade room doing it every single day. All we're doing is structure mapping in the trade room. All we're doing is structure mapping and planning trades, structure mapping and planning trades. You're going to be to the point where it's like, wow, this is like, I can do this. Okay. And there's no bullshit, right? We don't have time to bullshit you guys. We take this quite serious, very serious. This is a business, right? So I want to thank you guys for being here. Thank you guys for giving me time out of your day. And we'll put this recording up. Yeah. Jim, the poll is going to be ready for you guys.
Yep.
It's a one-time charge, Tony. Yeah, it's a one-time charge. Yeah. So it's not a recurring cost. Yeah.
I wanted to answer a question actually that I saw post up, if that's okay.
Yeah.
So Phil had asked a question about trading Forex. What if you don't have data in Ninja? So Phil, here's the thing. You can trade this on any platform, right? So if you're wanting to trade Forex, you have a couple options. One is open a Forex account with a Forex brokerage, forex.com, something like that.
FXM.
And just trade that account because you don't need a lot of money to trade Forex. You could trade any dollar amount, or you can, work at getting funded with, with Forex and go that route. So
yeah,
you could trade
using
on any
currency
platform.
futures. Yeah, you could
So,
trade currency futures. Yeah.
Yeah. So, or you could trade the currency futures. Yeah. In Ninja. So there's a lot of options. So,
yeah.
And that's the thing, guys. If you're not trading Forex, you should seriously consider it because we're hitting trades on it. And if there's money on the table, then.
And I know that some of you are in regulatory problems with that. Like the United States, it's hard to get a Forex account and it's not easy to open up. Some brokers don't work with Americans and stuff like that, which is fine. So then you trade currency futures. End of story. You don't try to, it's like, it is what it is. Yeah. Currency futures. And then you just trade the 6E, the 6A, the 6B, the 6J. That's it. The main ones. You trade the majors. 6S, 6M, Mexican peso. Like, it's that simple. Yeah. Anything with the USD as a base currency. New Zealand dollar, the 6Z, right? Like, these are all going to move tick for tick to Forex. Futures hit. Yeah. And we'll cover that. Yeah. I have a list here that I can just easily do this. Watch this. I'll show you this. Add label row. I'm going to move this down. So I'll just show you. So I have a watch list here for these. Majors. These are all the majors. You just trade those. The Aussie dollar, the British pound, the Canadian dollar, the Euro FX, the 6J. I mean, I can go right now and plan a trade on the Aussie dollar. I love trading the Aussie. It moves. The Aussie moves, man. It's a major player in the business. Australia's currencies have a lot to do with oil, copper. It's major currencies. So, if I'm looking at the daily, okay, daily's been predominantly down. So any structure breaks to the downside, I'm going to look to short it, right? Any structures to the downside. But I mean, here's a great example. Here's a great example of a structure break on the Euro futures right here. Boom. There's a boss break. That's the lowest low. The order block is right here. You can see it. Like that's the order block that led to the break of structure. It's a massive banger trade that just came right into that. Yeah. No, you can trade anything. If you go to Apex, William, you can trade anything under the sun on currency futures. They have the list right on the website. Yeah, you can trade all of these, every one of them. Yeah. If I go here and if I look at this would be, yeah, so I would look at the British pound. If I want to look at the British pound, 6B, and let's take a look here. So yeah, this was the last boss break. Take a look at this boss break here. Take a look. Did it close, Jim? I want to see. This is why you do the structure mapping. There it is. You can take a look at this trade. This was massive. There's the close below the pullback. That's the strong high. This is the order block that we teach you to trade. So this would have been the trade that you would have.
I saw that one, and I had it as a confirmation. Didn't get a chance to trade it, but I saw that. Yeah.
So on the 240, and then you go into the 60. Is there a way to reduce the risk down on the 60? There's nothing in here on the 60, so you don't do it. And then you go down to the 15, and you wouldn't have hit the 15-minute order block. Inside of this, there was no entry. So unless you took this on a first touch, you wouldn't have entered on this trade, which is fine. You're not going to catch every single trade. But the difference is you have so many markets that we send out alerts for that missing a trade just becomes part of the process. Like if you're not prepared to miss a trade from time to time, then you're not really a trader, because your job isn't to be perfect. Your job is to be consistently accurate with the right information, right? And that's what we do here. Okay, so I can promise you this: you're going to be on the right side of the market if you're in our trading room. One thing you will always be in our trade room is on the right side of the market. There's so many traders that are always on the wrong side of the market. They don't understand internal and external structure. They don't understand major and minor structure. And when you do not understand that, you really don't have a handle of what's going on. So one thing I can promise you is that you will have a handle of what's going on in the market, and you'll be in a place of power. You'll no longer come into a chart and be like, okay, where do I start? You always start top down. Boom, 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 boom. And I'm excited to see the magic happen for all of you that are coming in. It's going to be great. Yeah, I think it's great, Jim. You got a lot of traders that are saying they want to join for next week. So yeah, we'll follow up with them today. That'll be today's mission, is to get you guys all onboarded, and you'll see me and Jim in the room, guys. Yeah. Take care, guys. Enjoy the rest of your day. And hey, thanks, Ethan. Congrats on trading for a prop firm. Yeah. Yeah. All right, guys. Have a good one. We're going to let Jim and the guys follow up for all of you guys that said you're going to join. And we'll do another AMA for everybody inside the program once next week kicks in.